kind of segues me into this week's topic about keeping it simple. You know, a lot of times we're going to make things more complex than they should be, right? So I'm talking to someone the other day, and it dawned on me about the success that they were having was because they were doing just that, patterns within patterns. They didn't talk about it being patterns within patterns. They were just looking at some simple patterns that I'm going to talk briefly about today that could help you create that bias so you don't get over opinionated with stuff, and then use the patterns that you've learned that are remarkable transitionary patterns that are the head fake, long up, down bar, big lot, something that'll give you a clue or qualifier to get in or get out of the trade, but you got patterns within patterns that we'll build on, and we'll start with that in this session. But going back to keeping it simple, because most people overcomplicate everything, including myself, in things that we try to do, especially if you're not well versed in it. You're going to tend to overcomplicate it even more. So I put these two circles in this image. You and some semblance of an edge is going to be that overlap where your success is going to lie. I've talked about that in the past. It doesn't have to be every single technique and concept talked about in this program, but you overlapped with you and the skills that you bring overlapped with some of the stuff you create an edge with is going to be where your success lies. But let's keep it simple, especially with this session, right? And let's understand some things that are maybe no kidding type of moments. And we'll talk about it with a live chart after I show you this next slide. Higher lows and lower highs. Now, if I just went out, even for a lot of you guys that are well-versed in trading, and you've been trading and you've been in the industry for a while and you know the vernacular and everything else, I guarantee you that's confusing when somebody else is talking about higher lows and lower highs. After you think about it for a second or two, you could visualize what that looks like on a chart, right? Higher lows and lower highs. So what do we create? We need to create a pattern so the recognition becomes easier as traders. So the one thing I've gotten better at is helping others. So when I started to help others, I was okay at it, but then you get better as you help more people and listen to more questions and understand more weaknesses, and you say things in a better way. You have better, collaborative efforts that you're able to say something differently, create different visuals to make the point conveyed a little easier. Sometimes you just got to repeat it. Like guys in B that don't have speaking rights go into A. But getting back to this, higher lows, lower highs. If we just talked like that, you guys would have to step back and think every time I said higher lows and lower highs to think which element I was thinking or talking about. But if we then talked about them with using this word, failures, number one, include this word into your vernacular if it isn't already, failures of highs or lows, and these crooked M or crooked W patterns that you'll see pretty much whatever periodicity you use. Now, these aren't true crooked M's or W's because the guy who illustrated it wasn't a trader. But if I were to take and illustrate it further with my pen, this high would be lower than that high. So it typically would look like this. Now that's a crooked M. That's the beginning of maybe some downside, maybe. The next one is a crooked W. This low should come up a little higher, and it would look like this, crooked W. So when I say crooked M's and crooked W's now, that's going to be easier for anybody to visualize. We know what an M and we know what a W looks like, and now you can understand instead of higher highs, lower lows, and stuff like that. You begin to understand it quicker. You understand it quicker. And this isn't a session about this only. It's a session about building on this. But if you're able to recognize it quicker as I'm talking to you about it and showing it to you, your recognition skills are going to pick up when it comes to real time. Oh, okay, this is a potential failure. Because when I talk about transitional moments off the highs, off the swing highs, off the swing lows, day session lows, regular, whatever, this is the early recognition that I'm able to have by seeing it over and over again because you're constantly looking for failures. You're constantly looking for failures to find turns, to find opportunities, to start building that scenario in which you're now able to implement the skills that you have by qualification. And it's one thing that I think that you get in this course that you probably never got in other courses is better qualification skills, better win moments, hopefully. That's what you've gotten, if nothing else. So let me erase these drawings a second and go back to the screen. What we're trying to find are images like this for longs in the crooked M. So let's just take this and separate it. That's what the longs have to look like in order for this scenario to be a true bearish transition, or a transitional moment for bears, from bullish to bearish. That's what this crooked M, this failure, which are lower highs, if the graphic designer understood direction and made that high lower than there, that would be the beginning of potentially this line filling out. And understanding it in more real time so that when we're wrong, you notice I didn't say if we're wrong, but when we're wrong, we don't have to be wrong forever. And you could understand this as, this is more like a double top, but a crooked, a failure, so that the long, and only if you have enough longs that look like that are you going to get the continuation. This is what creates continuation in a failure, is if you get enough of this scenario to play out. Now, with that being said, what do the shorts have to look like? They have to look like that in order for this crooked W to work. Now, I could say for higher lows to work, and then you guys would have to stop and think what do higher lows look like. Okay, they look like crooked W. I just cut right to the chase. This low, higher than that low. That's it. Shorts have to look like this in order to do what? Create the buying pressure for this to facilitate this bullish transition. Transitional moments are when bulls turn to bears, bears turn to bulls. But in order to find an advantage to that, your recognition skills of when that's happening have to be as close to real time as possible. So close to the turn as possible. If you're driving down the street and you know which way as soon as possible that you're going to have to turn, chances are you're not going to miss it. You know a turn is coming, in other words. If you're like, there might be a turn there, might be a turn there, might be a turn there, damn it, there was a turn there. Then you missed it. You passed up the turn. The turn already happened. So you want to be closer to real time of when potential turns could happen. Or, as we also could call them, as transitional moments. So I could always say and use the word turns that I have in the past. Transitional moments are going to resonate better with people because they kind of understand what transition means. A turn, what do you mean turn? Someone that's brand new or fairly new in this business or never really got engaged with other professional traders, you'll never understand what a turn means. A turn, they don't even understand rotation. They don't even get highs to lows, just they don't understand how to follow a market, let alone trade it. So how are they going to understand a turn? So if you find these failures, you're going to now be able to take a pattern within the pattern. That was the subtitle to this session, a pattern within the pattern, which oftentimes could include head fakes, the long up, down up bars, some big lot that comes in, or an ancillary that could push your rear end in or out of a trade. But you're more suited to understanding a better bias because of just some simplicity of understanding that they're failing at one moment or another. Now, you guys have to find a periodicity to play with to understand this and put yourself in a better predictive mode, because your bias is better, then this stuff is going to work better. Now, I've always taught this from teaching this first and then walking back to a bias second, because if you don't know how to do, this is the harder part of the two. Understanding these patterns and why they would work in more of a smaller time frame moment. But these are a little easier to recognize, and if they're wrong, you're not wrong for long, or you don't have big risk parameters. Higher lows, lower highs, higher lows, lower highs. There are guys that just keep it that simple, but they also start to qualify underneath having this opinion. So let's go to a chart, and you could just play with different periodicities. When I say play with different periodicities, you throw a 5-minute chart up. I got to turn this Twitter feed off. It's driving me nuts. I barely even look at it, and I have it up. This is a 5-minute chart. Create some simple damn rules that are unbreakable because they're simple. It's simple. There's no reason that you'd forget it. And you have to follow them, or maybe you could set you're going to lose your, you're going to jail if you don't follow them, because they're not trading rules that make you trade. I'm not a big guy and big proponent of rules. I'm about trading laws, because rules are meant to be broken. Laws put your ass in jail. So I'm more of a proponent. If you got rules, make them laws and don't break them, because if there's no consequence behind them, you're going to break them, period, especially when we become whiny with our own money on the line. We become spoiled brats. But just take a look at this chart. Let me change my pen color. First off, we know to follow this, and it's a little harder with 5 minutes. They don't rotate as well as a 4 or 6 P&F, but we're just looking at it for simplicity. All right, simplicity. At this moment, before you know any of this downside, because we don't know that is going to happen. They're going to break them all the way to there. And we don't know it's going to rebound and go to there. But what do we know before it breaks, before it ends up going from here down to there? What do we know? What information can you pull based on what I've been talking about? And let's drag this chart over. Let's blow it up for you older guys that have trouble seeing, not mentioning any names. But before you're seeing any of this, you could say a couple things. You could see that there are lower highs that you're getting to come into here. They're not even getting close to that high. Another thing is you could see these lows getting beat up, right? Some of the relative retracement lows are starting to get penetrated and beaten up. And what? They're getting hit multiple times. And as you know from going through this course, you know that the more it hits an area, the better chance it has of eventually going through it, right? The cracked ice. So then you could kind of be bearish before it ends up getting bearish and breaks, has that big sell-off. Because I got news for you. If you're not bearish until it does this, you're too late. Yeah, you could sell pullbacks, but then you're more inclined to catch it in you know what and get your face rearranged on the upside. Because, I mean, if you're bearish after it breaks down to 37.5, 38 even, where the hell were you when it was trading 42, 41, 41.5, 42, 41.5, 41, 40, right? You're late. There's too many people better than you. And that's fine. That happens. You don't have to get on every move and get on the right side every time. But just look at what's getting beat up if you were to ask yourself that question. The lows were getting beat up and the highs were failing. Potentially, and use that word, failing. The highs were failing. The highs were failing. You could say lower highs all you want. That works. But that's got to, what are we failing? So it seems like a washout was coming and it had to happen. You could go back to this moment and you could look at this particular scenario in here and you could identify consolidation. You could say before it broke that it was not making higher highs and had several instances in which to do it. Was the right side the downside? I don't know. All I'm saying is if this low is in trouble and they take it out, then it is. Because they failed here and now they were failing to make higher lows in this up or down sequence. Now, look at this low. You're not going to know. I'm going to tell you this right now. You're not going to know. I went through this very early in my career when I started to flip through charts 17, 18 years ago, that you're not going to know that that second circle I just drew is a failure of the first circle I drew. You're not going to know that's the failure of this guy when you're down there. You're going to have to wait a specific period of time, and there's no, I can't give you, you got to wait 7 minutes, and then it's the low. There is no science, but you are going to have to wait, and before it goes all the way up to there, way before that, you better believe that you should recognize then that that was a failure. You're not going to do it when it's down there because sometimes it just blasts through it and ends up making a lower low. But you better have a better transitional moment to recognize a crooked W in a way. Let me draw that better. Yellow against the yellow doesn't look that great, but you get the point. You better at some point in here and with other transitional moments and patterns that we've created to teach you that the upside was the right side and that indeed, hey, this could be the failure. You probably got shorts that are pissed that they didn't cover at this moment or that moment, just by looking at it. Now, it's easy for me to say this because I knew it rallied to 43. I could see it. But you guys hear me talk real time all the time in the trading room. There would be transitional moments to the upside well before it blew up to 43. And it really wasn't until this moment in here where you could start to think that the bulls were in trouble, at least temporarily, after it started walking up. On this particular periodicity, and I think this is a 5-minute. So let's take a look at, here, if I'm walking this chart sideways, I'm looking and saying to myself, there's a moment in here that the market is getting a little bearish from here to here, but this is, I think, one day to the next. So you can't just, take that. But let's pretend it bleeds over, that the market's bearish. And it wasn't real bearish, but it wasn't bullish anymore. It was sideways. But at some point, I would have to say that if we can't get through there, I'm no longer bearish. I probably would be neutral at this point, just based on what's going on in here. Not knowing if it goes up or down, but I wouldn't be bearish anymore. Why wouldn't I be bearish anymore? Well, because at this point, I know it made a higher low. So it maybe has a failure there. I also see that it had several attempts to go through, and now as it drags away, these guys are mad because they were anticipating a move lower, potentially. I don't know. There's also lower highs. So that's what would pull me into being neutral. So what does the market do? What does the market do? It's an overnight session, keep in mind, but it continues to walk up. Before it blasts up higher, you better not be bearish anymore. You could be taking shorts, but you should know you're against the grain. There's nothing wrong with trying to sell highs and buy lows. Because anytime you try to sell a high and buy a low, you're going to be against the grain. But at least you know that. You should know that. And how powerful is it? So before we knew it ran up to these 50-50s, way before that, we no longer were bearish. Whether how bullish we were, doesn't matter. So then you must understand the market picks up really bullish, but just coming in here, I don't see anything. Now, too late because I already pulled the chart over, so I know it went down. But you could look in here and say the market's having trouble making highs, and they're higher or lower highs. See, I'll even screw if you keep saying it, but if it's a crooked W, it won't. Let me choose a different pen color. I want to show you something. So if you have an M pattern that's beginning to show crooked M, right? Is it easy to say, hey, this market's going down? Of course not. But it's easier to stay bullish. It's easier not to stay bullish when you start to understand that pattern. Buying it, and getting your face rearranged all the way down when you didn't see a moment of failure in the market. Oops. So let's get back on the chart. So I would start being bullish, failure of this low. And this is an exercise you guys should do. So then when you're right, and it is bullish a little bit, you're no longer surprised and it's no longer random. Now I'm back. This is a crappy. You got to understand too. Hey, you're trying to predict an overnight market, so it's using a consolidate. What do I get in here? It's making higher lows, lower highs. I'm neutral. I don't know where it's going to go. and it's crap. All right, now I already know it went higher. All right, so I'm bullish. What would get me to be bearish? That. Do you see a higher low in here? It would just, do you catch this up move? I don't know. I might not have, but I'm saying that this is just a breakout opportunity. Plus, you're going to get caught when you're doing this exercise and trying to predict too many choppy range movements. So your best bet is to just put it on a day session. So this ends up being a day session, and we come in to fail to make the low, but we don't know at that point it could be a failure, but we do know something based on what you learned in here, and that these highs are probably in trouble. There's buy stops above them. So when it moves up like that, you're not so surprised. It goes back to the exercise that I tell people to do to review or to preview a session, review it. Review prior sessions to get yourself in a position to sharpen those predictive skills so they don't feel random. Like you could predict this move up and you really didn't know. Don't trade that on sim. Practice it with a chart. This looks like a failure of this high. This is a failure of that high. So these lows, to me, would be in trouble. And I could be wrong until they take those swing highs out. It's bearish for a while, and it's bearish throughout the rest of that sequence. Now this is a 5-minute again. I just scrunched it up to give people a sense of what we were doing in here without even knowing that it was maybe a failure here of this rotation. We were bearish even before that, on this move to the mid-50s. If you were coming out of the trading room, right? We were bearish before it let out down to 55 3/4. But now would you be a little bullish? Yeah, because this could be the failure of this. So you could transition using this, then you narrow it down with the other skills of the PNF and the rotation and the head fakes and the long up down bars and things like that to bring it in. But first keep it simple. What you're trying to find simply is this. There's a high, there's a second peak. Hey, that's the failure of that high. Well, Anthony, what if it does that? Guess what? It's gonna. But you're using the word failure to start transitioning. I don't want to say before some of our other techniques would get you to transition, but maybe help you recognize this transitional moment better than the other techniques allow you to understand them. Because in the room, since I've really been telling guys these transitional moments, I'm spot on with them. And if I'm wrong here and there with them, I'm not obviously still bearish when it's not been bearish for 10 minutes. And you guys know that. So you follow it moment by moment with me so you could be bullish, but maybe not bullish yet. I said that last week and I liked it. Just because you're bullish doesn't mean you're bullish or have to be right now. Because small time frame guys are bearish. So don't get yourself trapped or slammed or sitting on the railroad tracks trying to buy it in a bearish moment when the bears have the leash. Let it transition. Where you could turn and catch those bears off guard. That's going to give you a better location for your bullish idea or bias. So now we take this 5-minute chart, which is limited in what it tells you, and we we ratchet it down to our favorite 4 P&F, and we know that if that indeed is the failure on the 5-minute, which would come in down there, and that's what the 4 P&F looks like, there's been moments to buy pullbacks to areas that could be what? Support. This could be a long up-down bar that made you hesitate to buy it, and great. So you didn't buy it. And then we get the rare, well, this one retraces this whole down bar. So now you're back in the bull mode, and this thin spot holds as support. And it starts walking up. Now there's buy stops above here. Especially for you longer term guys or guys who like to hold on to the trade. As you're in the trade, are you getting what you need to keep the other side pissed? If you guys are long with money into it, are you getting what you need pattern-wise to keep these guys who are short PO'd? Because if you're not keeping shorts, new or old, PO'd, it's a chance that you're the one that's going to get PO'd. So you want to keep the other team mad, and that's the buy pressure you would have to create upside, that you would need to have to create upside. Hopefully this helped. This comes out of sharing with you guys what I get from other people, and that is they're doing well on some simplistic ways to create a bias instead of having all the complexities that tell you that it's bullish. Today, I mean, we talked about it at 8 o'clock. It closed strong on Friday. We're opening up even stronger overnight. If we don't make an attempt to go lower, let's look out above. Let's not overthink it. So maybe you didn't have to get long, but if it made you get short less, if you made you not get short, those watching this on recording, it's the 21st of February, 2017. But the point is, if it kept you from getting stuck or leaving a longer leash on a short, great. If it got you long, even better. But when people tell me things that are working for them and they're very simple, listen, it's not simple to the rest of the market. I don't know what you guys think of this session, but I would hope that you like it to just create snapshot references that, hey, the lows are in trouble or the highs are in trouble, right? The lows have been failing and the highs have been in trouble in these sequences, whatever periodicity that you're using. I could bring a gold chart down in here. What I like about gold is that you'll get a lot of these moments where if you're not following this, you're in trouble. You know, they break out, they have a head fake, and they make a lower low, but they quickly take out where there were buy stops above there. Now, I don't know if you were anticipating it or you could have caught it or would have caught it. I can guarantee you people that follow me weren't stuck short for this pop and rally in gold if they trade gold. Well, they take out those highs, guys. They take out this high. They take out this high. And all of a sudden, you know the bulls are in control. Now they've got higher lows in all three of those circles I just drew the whole way up. Higher highs. Maybe not in there and there, but this is a 2-minute. But higher highs. And could you anticipate another breakout coming? You're damn well right you would. This is not a surprise. Is that a surprise it broke out, knowing what you know? Knowing what you know. Is that a surprise? What's great is I'd like someone to tell me that they traded this, they tried to sell it, they got out quickly and eventually caught this on the upside. They were bearish in there, bullish, not necessarily quickly to reverse, but they understood breakouts were coming. So you could say this too, and you could create some parameters. Don't call them rules. Don't call them rules. Call them either laws or parameters. You could create parameters, because here's what happens when you create a rule and you break it. You get mad. When you get mad, you're no longer objective. So don't get mad. Parameters, they're supposed to leak. You know, if you have parameters on both sides, you're going to leak on either side of it, but they're just parameters. That's it. So here's some parameters. Yeah, it's making a lower low in those two pink dots, right? But in the sequence, it's making higher highs. Well, there's a lower high there. Fine. So it's choppy. But then this high gets taken out. Should you be bullish? Yes. That high exceeds the previous dot. Should you be bullish? Yes. This low is still intact. Should you be bullish? Yes. Should you be surprised if it breaks out like that? Hell no. Now you're walking through this as you're studying a chart, and my mind is seeing all this without articulating it. And so does yours, or so will yours. Without articulating it and going through what I just went through, that's how my mind just wraps into a chart. You know how I tell people early on that this is how you should visualize a chart, up, down, and you should. But there's also things that you drill down inside of that, and that's just this little exercise I did with you, where lower low, lower high, all right, you could be bearish. Oh, they take it out. Now you should be bullish at that pink dot right there. And you could stay bullish. And now you knew where the swing highs that the shorts were in trouble around. You're always thinking about the other side and where the hell they're stuck. Gold's a good way to do it because it's moving, it's creating more of these sequences for you. So it's a good, I would say, chart to practice this on. Because with the ES like we did, there's a lot of chop with it. Anybody got questions? You're just trading gold like this. You sit and say, well, I'm not going to get bullish gold until they take out whatever a decent swing high is. And here's what's interesting. Guess what? I would say a decent swing high kind of got took out right there. So you could start saying, oh, man, I'm going to be bullish. But wait, they took out the swing lows here. So it doesn't matter if you're wrong. You want to be wrong, but you're not wrong as soon as it gets below inside that. If this was a failure, right? I mean, if this was successful, it wouldn't jump back into it. Does that make sense? Now let me say that again. If taking out, we talked about a failure, right? The opposite of failure is success. If it's successful to take out a swing high, so this is a swing high, right? If it was successful taking it out, they shouldn't drag back into it. They should curl back and keep that going. They shouldn't drag back into the success of what they breached. This session in and of itself isn't going to make you guys $1 million. Hopefully for many it was a piece that might have been missing, or that for others could be added to your ability to recognize, create a better bias that's not yours. It's the market's bias. Started talking about that a few weeks ago. I don't care what your bias is. What's the market's bias? Let the market be wrong, not you. You become becomes less personal. It's not you anymore, it's the market. Market was wrong and you just did what you're supposed to do to manage the risk of the market being wrong. I'll end the recording now for those watching it in the future. One other thing, well, for guys in the future, this won't matter, so I won't cover it. But it has to do with what could be coming out in the next couple of weeks. But so I'll still end the recording.